to Israelis who have family members, that they have lost family members, who are hostage, were taken hostage. I've held people when they have cried. I have also talked with Palestinians who are frantically searching for family members from a distance, searching for family members in Gaza. This is something that people are feeling here. And for that to give rise to hatred of a whole group is wrong. And we need to fight back against it. It is so important at this moment to say that we can disagree with each other, we can argue with each other about the appropriate policies for the United States to take and for other governments to take, but that is not an excuse for hating a whole group of people.
Real quick, do you think that the leaders of these universities, the three that you saw, should still be in their jobs? You've been very outspoken about other people and their jobs. I'm curious about these people and their jobs.
Look, they have all said,
good morning, everyone.
And if you can't lead, if you can't stand up and say what is right and wrong, very much in the extreme cases.
Good morning. Let me make the announcement. Let everyone know I'm live. Oh, let's go.
Thank you.
What it do? What it do? Good morning. Good morning. All right. Still pushing. Good morning. Yes, let's kill it today. For some reason, today feels like a Friday. Am I the only one? Like, today legit feels like a Friday. Good morning. Good morning. What's up, my peoples? What a lovely morning we have. So y'all see the bounce already. So I think today is going to be pretty much dip buys. As long as we don't have a crazy sell-off like we did yesterday, I think we're good. Ta-da. Every day is a Friday for me. That's what's up. Yeah, I'm here like, yo, I was like, today, I'm like, what day is today? Like, certain days you can feel it. Other days it's just like, nope. It's like, wait, what's today? All right, give me a sec. We about to get to this. All right. So here's the thing. So if we happen to pull back to 45.64, I will re-enter the contract that I took off. So I got long on ES at 45.61. And I'm going to be watching for a pullback to 45.64 for a re-entry long. Let's take a look at some of the stocks and see what they're doing. Tesla's already up. I think Tesla's going to end up pushing back up to 246. Nvidia looks well too, higher low from the lows of yesterday. Nvidia could possibly push back up as well. Apple's looking good. Meta sideways, but I think Meta will catch a bid once the other tech sector starts moving. Microsoft uninterested. AMD looking good as well. Ooh, beautiful. Beautiful end of the day. Ooh, oh my goodness. End of the day would have been a nice call buys. Netflix, okay. Amazon looks good. Let's take a look at. Yeah, yeah. I think we're gonna end up seeing SPY come for these 257 area to fill this wick. So dip buys.
Outlined, of course, Exxon's plan for growth and spending, buybacks. That was all yesterday, and then we've also got another big guest towards the end of the show. Homebuilder stocks hitting new highs. Well, Toll Brothers CEO Doug Yearley is going to join us. And again, as I said, later in the hour. All right, let's start off with Amazon. Jim, of course, sat down with CEO Andy Jassy last night. They talked everything from AWS to AI, the consumer, the holiday season up ahead. Take a listen.
Consumers are still spending. They're being careful about what they spend on, and they're looking for bargains and deals wherever they can, and wherever they can trade down on price, they're trying to do so. And it's really why, if you look at what we did in our holiday season, it's always important to save customers money, particularly during the holidays, and especially in this type of economy. And so we, in our Prime Big Deals Day, which was our exclusive event for Prime members to kick off the holidays, we had tens of millions of deals, and it was by far the best kickoff event that we ever did.
Jim, that's interesting, and especially coming on the back of hearing from Doug McMillon yesterday as well, the other major retailer in our country, in terms of the consumer. What else stood out to you?
Just beautiful. Beautiful, beautiful, beautiful.
Consumer starts buying. I thought they would, for the holiday season, pay up a little more. But Andy Jassy's talking about some of these Chinese sites, the Shein, that's doing incredibly well. The people are looking for bargains, but at the lower end, I'm wondering if the lower end isn't struggling. You put that together with what McDonald's said yesterday, lower end having trouble. There is just this cohort, David, that has been left behind. And it's important that we remember that this is the group that's been left behind by inflation. So I know a lot of people feel, and certainly in the bond business, inflation's under control. That is not what I felt from Andy Jassy.
Yeah, I feel like we have been hearing, certainly anecdotally, that there has been weakness, particularly at the lower end, so to speak, of income, Jim. I wonder, though, does that really translate into a significant diminution in overall demand?
No, I don't think so. I just think that if you're in the high end and trying to sell something online,
Sensational.
I think you're going to struggle. It's not where the money is. And by the way, these Chinese sites, they're partners with Andy Jassy. But if you go to them, you'll see that the average price for what people are buying is $12. It's very hard to make money on a $12 item if you're Amazon, because it costs $6 per package to sell. But to bring it to you, but David, I think Amazon's doing fabulously because they can pivot. They don't have inventory, but if I were a brick and mortar store and I listened to that, no confidence. I have no confidence I'd be able to sell my high-end stuff.
Yeah, and it's an interesting point on the likes of Shein, which of course we've reported on endlessly over these last few months, which will be coming public next year, and Temu, which I've been talking about a lot lately, in part because of the very strong numbers. I think it was still last week that we got from Pinduoduo PDD. Sort of that new business model they have in terms of how they access consumers, how they respond so quickly to trends, really just based on the desires of the consumer themselves. But Jim, Amazon's a lot more than about selling stuff to people. It's also
Like sensational.
AWS. In fact, really, so much of the profits and growth of the company has been from that incredibly important engine. Jassy discussed that with you, of course, talking about, hey, it's a $92, $2 billion business, annual revenue run rate business right now. What did you pick up from him in terms of beyond that? We can take a listen to some of the sound that or his thoughts that he shared about AWS.
I continue to be very bullish about AWS come 2024 and beyond. I think that the business today is $92 billion annual revenue run
Let's
rate business.
go. We
90%
pushing.
global IT spend is
We
still
pushing, ladies and
associated with
gentlemen.
business.
Good morning, charting queen. So, for those of you guys just joining, I am currently long ES.
If you continue to have the largest
Might have missed a little dip by on
securities we do and the customer orientation we do, I think
on NQ. It came down to
Yes, the contrast
9,800,
where there are obviously
980, well 908.
AWS Amazon Web Services is so stark. And Andy Jassy comes from that. David,
Oh,
AWS,
I hope we get a nicer pullback
one of the takeaways I have is that
at 930.
as my chair of trust is, you've got to feel so confident because the division that people are really worried about, AWS, because that's been going down in terms of its rate of growth. That's what it's switched direction. It's totally inflected. A lot of it, by the way, is actual AI, and a lot of it is just the huge amount of hyperscale compute that is necessary if you're going to be able to do these large language models. This thing is a juggernaut, David. It is completely different from retail. And I think that Andy, I think we'll be able to talk to Google, Microsoft, holy cow. These guys are making money right now on all the stuff we talk about. And you'll see that also with AMD, with what Lisa Su said.
Get it,
Far ahead of
get
plan.
it.
And that is what Wall Street doesn't understand.
Get it,
Wall Street's too
girl.
jaded. This is where the money is.
All right.
Like sensational. Good morning. What's up, Gator? What it do, bro? I know you caught a piece of that gold short. I caught some of it the night that it spiked. After that, I did try another short the other day. I think it might have been yesterday or the day before, and I got stopped out. But I still made like over 20 point shorts on it, so only lost about 4 or 6 points. Today I'm over here looking for longs. Currently long on ES. I'm up 9 points on that.
Partisan law which paved the way for universities to patent and commercialize discoveries made with federal funding, ranging from Google to AIDS and cancer therapies. Now, it's never been applied on the issued price. Just last March, the National Institutes of Health denied a petition from cancer groups to use the margin provision on Xtandi. That's a prostate cancer treatment that lists for more than $160,000 to allow drug makers to produce it, other drug makers to produce it. That led to this review and the new proposal. But beyond margin for drugs, the administration is also going to launch a joint DOJ, MTC, HHS task force.
Thank you.
to work more closely on antitrust issues and looking at consolidation
Like,
in
how you feeling?
private equity
Sensational.
and of physician groups. They're going to require greater transparency on ownership of healthcare entities, including more oversight of private Medicare Advantage insurance plans. Now, Joe Allen, who's a former Senate staffer for Senator Birch Bayh, who helped write up this bill, he has concerns. He told me, the key for March in was whether this would be available for people to use, and then to use some criteria to see.
Yeah, today looks like a long type of day. Curling. Yep, exactly. I had tried last night during Asian session. I had tried a long, but I took a small 1.5 loss. I thought about, setting my buy at 45.50 to try to capture this movement right here, but it's all right. I got in after the report came out at 8:30. Everything's looking good this morning. Gold, oil's bouncing, gold's up. Might want to dabble with the Nikkei later on tonight. So if the Nikkei stays around this area for the day, and let's say ES and Nasdaq and Dow all spike and run today, come 6 p.m. or, to be honest, probably at 4:30ish, whatnot, I'll pick up a contract or two of the Nikkei to catch at least maybe a 200 point movement up. This thing is down. It was down over 700 points. But do be careful with the Nikkei, because once it starts moving, whew, it moves. And it pays pretty well too.
folks,
Doo-doo-doo-doo-doo.
companies will continue to argue. I mean, we have to be able. We're not going to
Stop
make the investment
playing
if we
with
can't
me.
get the return, right? Simple as that.
Look, that's always been the argument. Then they say they're blow
Mm.
overseas. Whatever. All I can say is that it doesn't seem to matter what the drug companies do. It's you can visibly assault them, and people will say, "Yes, that's it. Inflation." They understand in the White House.
All right, Jim, stand by. After the break, we're going to have an exclusive with Exxon. They'll be joining me right here. Tonight, of course, talking about the company's updated corporate plan. Let's give you a
Bro,
look at
NG, bro, yo, I wasn't along on that, dude, and I had to kill it. One of my dudes, like, he is hurting on it, bro, like down like over 20 bands on a swing, and I was just like, yo, like I can't rock with it. Like this thing is just kept dying, bleeding. It's like, nah, I took my small loss, and I ain't touching it, man. I ain't gonna touch that gas until like next year. Shit's just ridiculous. NG, where you at? Yeah, this was just savage. Like, I don't mess with you. Clean my shades. And damn, was NQ a good long? So you trading today, or are you sidelining it? There she blows. Yeah, there's a serious lag between Thinkorswim and Tradeovate, bro. TP of 4573 coming. Damn, baby girl. How you feel? How you feel? How you feel? How you feel?
yesterday, some significant news lifted its buyback target to 20 billion, for example, forecasting higher production.
Yep, I was just saying it. Just
Rebounded ever so slightly a bit, fell below $70.
crazy lag right now between ES, Thinkorswim and Tradeovate.
And in person, I want to get obviously to a lot of the news from yesterday, but just curious. I mean, oil has come down significantly over, I don't know, last month, 6 weeks. Any thoughts as to what the reasons are behind that move down?
I think, you know, frankly,
All right. 4573 hit.
fundamentals. And I'd say over that longer term, generally speaking, it's a depletion business. You see every barrel of oil that the world produces is one less barrel available. And so that depletion business requires constant reinvestment to maintain, if not grow, the supply. And so we tend to look at that longer term. And I'd say investment into that, replacing that depletion is on the light side. It has been historically, continues to be on the light side. So our view is over the longer and medium term, the market's going to remain fairly tight.
Yeah, you think so?
I think so, yeah.
Fairly tight. Now, where are we? Around 13.2 million barrels a day for the U.S.?
Like that, right?
Yeah, not bad, right? I mean, when you hear that number, what comes into mind? We should be doing more. We've done a lot over these last few years. What is
Give
it?
us a
Speaks to the
pullback.
resiliency of the unconventional business, the innovation.
Yeah, nah, it has nothing to do with our system.
Similar levels of production. A
less rigs delivering more production, which just speaks to the innovation and the creativity of the people who are in the Permian producing. And my view is we're going to kind of continue to see good activity in the unconventional space. I suspect the growth will slow down, but we'll continue to see some level of growth coming out of the unconventional, which is frankly good for the world.
Oh my, oh my.
Energy security.
Yeah, and the Pioneer deal going to help you actually increase production.
Yeah, so what we're doing in Pioneer is we've put a lot of emphasis on
And give us a better pullback.
how we can bring capabilities and skills that we've developed all around the world to bear in this unique U.S. resource. And frankly, have developed an approach, technology,
Order filled.
way of
Just entered long on
giving
NQ.
So we're taking what Pioneer has to offer, which is very capable people.
I think
and
she's gonna
the best
push
acreage in the Permian.
at least 960. So I'll set my take profit at 955 and add if we pull back down to 15,900 even, I'll add to my position.
We got a 2030 net zero plan for our own existing Permian production.
I've been there, obviously spent time with a lot of your people down there.
Yeah, we're on track for that. So I think we're working. We'll bring that forward if we can, if we find the opportunity. So lower emissions, less environmental footprint, more production at a lower cost, good for the economy, and frankly, it helps U.S. energy security. So I think there's a lot to like about that, and it generates additional value that neither Pioneer or ourselves can do without this combination. So good for shareholders. So I think any lens you want to look at that deal, it's a win-win-win.
You think it's a win-win-win? Since I'm on the subject of it, and obviously a lot to cover here, though, you did get a second request for information from the antitrust authorities. Not a big surprise.
No.
Any concerns on your part, though, on that front?
No, I think we're going to try to respond as quickly as we can with the information. We think it's reasonable to take a look at that. It's got a lot of headlines. It's large when you look at the transaction in and of itself, but in the context of the bigger market, it's a very small transaction. Our production will be less than 5% of U.S. total production. Even if you focus in on what's coming out of the Permian, we're less than 15% of production. And of course, on the global stage, which this market, as you know, is very liquid, very transparent. We're less than 3% of production. So I don't think there's any angle that you can look at this potential combination and find any concerns about competition.
Yeah, and when you talk about a technology upgrade, and it's my word, not yours, but I mean, do the Pioneer guys say, hey, wait a second, we're as advanced as anyone in terms of getting the stuff out of the ground? What are you talking about?
Like sensational, and keep doing the same thing I did yesterday. Keep pushing them. Let's see. Yeah, I don't see a drop until, I mean, maybe if we get rejected at 15,988, but we'll see.
Same with the environmental reduction. They've been very focused on environmentally responsible production, but they don't have the same resources that ExxonMobil can bring to bear. And so I think, frankly, that's a broader theme for this whole challenge the world faces with respect to reducing emissions. It's going to take scale. It's going to take large companies with the kind of resources required to make significant progress there. We have a key role to play there. We're going to do that in this unconventional space, but we're doing it in a lot of other places as well.
Yeah, you are. I mean, obviously, I spent a lot of time, as you well know, with you and your team focusing on that. Let's talk a bit about it, because yesterday you did increase by another $3 billion, sort of your lower emissions opportunities and what you're willing to spend on them. It's up, when people really look back, it's up from what was originally $3 billion not that many years ago.
That's right.
Is this, I just wonder about the return that you can get on that.
Right.
And when we look at the stock market,
And you know what's even beautiful?
free cash flow generation from a mature
I
company, you're going into
definitely dropped the ball on this one
with return parameters, it would seem that may not lend itself to as much
on
free cash flow.
NQ. So take a look. I'm gonna post the link in the chat so you guys could see it got right above a zone and just push. Check that out.
Not like our other businesses, in that we are establishing brand new value chains. Today, there is no market for carbon reduction. We are establishing that market with carbon capture and storage. And it comes back to, frankly, the fundamental of what can we.
This was solid. This was solid. NQ, let's take a look at a 5 minute. What was that level? 5 minute. The wick down right here. Right here. This was it. And then
reflection of, frankly, a
The
broader
levels right here.
understanding
So
by
damn,
society
860s. Ooh,
the solution to addressing climate change goes
just
well
push a
beyond
little bit
wind,
more.
solar, and electric vehicles. Those have a role to play.
Just a
But so
little
do
bit more.
molecule
Come on.
solutions, carbon capture and storage,
You know you
biofuels,
want to.
hydrogen.
Like, you
That
know
is
you
right in
want
our
to, girl.
wheelhouse.
Don't
Things that
play
we
with
have done
me.
for the last several decades plays to that need, and we're building that business. The returns we're going to generate for the portfolio we have today, based on the existing policy,
Yeah.
is 15% in aggregate.
And you can live with that.
That's
Or, I mean, we're
for a
talking.
business that you're starting,
Come on.
that have the capital investment. I think that's a pretty good starting point. I think that reflects, frankly, the
I'm
capability
gonna
that
set
we're
this
bringing to bear
by.
here.
But will you get rewarded by investors for doing that? 'Cause
Let's
there's that
go,
other side of the
let's
equation that
go.
always comes to bear here. You have to balance them both.
I pray we get a nice little pullback. I'm gonna set. I wanna wait, but I think 910, 900 even would be a nice pullback area for.
And products that the world needs to support modern life. We're positioning ourselves to strike that balance. We will move resources and allocate resources based on where that demand is greatest, where the need is most unmet, and then how quickly that transitions. So we're fairly unique in the space that we've got optionality here. We can continue with our traditional business if the transition happens slower,
Right.
or if it happens faster than what people are thinking, we've got the ability to shift resources and invest there. So we've created a lot of optionality here.
Understood. Does faster mean when there's a higher price on carbon? It's 85 right now a ton, I think.
So $85 a ton through government incentives.
Right.
That
But it's possible that could go higher.
That,
I mean,
if you're going to get to if you want broader application of carbon capture and storage, it's going to have to go higher with time. We view this right now as an opportunity to get started, get the technology in place, start building these things, generate some efficiencies, and see if we can't find ways to lower the cost, both from a construction standpoint, but from technology evolution and scale standpoint. But David, I got to be clear. For this to be successful with time, we got to move from government subsidies to a market force, and we see this as being a temporary catalyst to get started.
well, you know, a lot of the projections in here or the numbers, 2027, sort of everything kind of comes to that year.
Right.
When you think about this, is that a key moment, 2027, 4 years from now?
No, I think for our base business, we set out a strategy in 2018 to double cash flow, and our target is to basically make that happen by 2027. So the 2027 timeframe is very important with respect to our established businesses, and frankly, we're on track to deliver. We've basically cut $9 billion in structural costs.
You're going to continue to cut costs.
We're going to continue $6 more billion, so we'll get to $15 billion by 2027. Clear line of sight to make that happen. We're doing it at the same time we're improving performance, better reliability, better safety. We're growing earnings. We captured $10 billion of increased earnings potential from 2019. We got another 14 of earnings and cash flow. So a lot of, I think, positive momentum there. The low carbon solutions business, you know, the time it will take to get these, first of all, get the policy in place. So the IRA still has not been translated to specific regulations. And before we can invest the money,
Nice. Keep it going. Keep it going. Keep it going.
legislation get translated into effective regulation. So we're waiting. We're working with the administration to help them understand what's required. So a lot of the discussion we had yesterday with our investors is, while we have a line of sight to some profitable opportunities, there are more things that have to happen. The regulations have to be put in place. We've got to get permitting for the wells. There's a number of things that have to get finished to make sure that those investments are going to generate the returns. And we are pacing the development of those investments to make sure that we've got certainty around that so that we get the returns we're talking about. And what I would tell you, frankly, we're looking at it as going to minimize any downside here and create a lot of potential for upside. And then society will determine just how quickly that manifests.
But and if the regulations are right, but it does occur to me, we have a presidential election less than a year away.
Let's see what y'all saying. What y'all saying.
You could imagine a scenario under which he undoes all of those.
That's a
Good morning. Good morning. What's up, Dark Trader? No pullback on NQ yet. Spike, then drop this. Keep pushing all the way up. Morning without getting this out. There was
So ultimately, it wouldn't be that big a financial risk to you. Should we
zero
have this get done?
retracement. This
You might not want that to be the case.
just in the Maverick card open. Yep. Well, let's see.
contribution in that space. like us doing that.
That's a possibility, or this thing may just continue to fly.
For society, for our country, or for business.
What's up? What's up, bro? Just here. Yeah, nah, this ain't looking like it wants to give way anytime soon. Ooh, Dow. I'm gonna take a long on the Dow here. Looking for about 100-point TP on the Dow. Oh, look at ES still going, baby. Chill out. Give us a pullback. Give us a pullback.
It's an important component of the overall company's production at this point. Sure. There's concern that Venezuela is going to try to basically, around this border dispute, invade a certain part of the country, take over a certain part of the country. What are your thoughts about this, and how much risk does it present to ExxonMobil, given the importance that Guyanese production has for your company?
Well, I put it in the context of what's been happening now for many, many years. And frankly, before we even started our first production out.
Go. Like, I don't know. Yes, I'm in longs on NQ. I got in at 15,925. I'm looking to add if it comes down to 15,900 area. And I'm still long one contract on ES. I got long 3 contracts at 45.61, and first TP was hit. Second TP I'm looking is going to be 45.84, so be on the lookout for that. And I just entered long on Dow Jones. I'm looking for a 100-point movement to the upside on the Dow. Let's go. Oh, baby. Mwah. Mwah. Oh, we got a few minutes. Bruh, let's see. I'm going to try a buy right here. See if we get that pullback.
Jim, I want to throw it back over to you. Just get your thoughts here. We also got some news this morning from Chevron as well in terms of some of their spending plans.
I thought it was amazing. I mean, you're the CEO of the most storied oil company in the world, talking about balance, not talking about, listen, we got to do a lot, we got to bring out as much oil as we can. No, he's talking about bringing out a lot of oil and then balancing it against emissions. Now, I don't know if people in government realize how radical this is. He is a radical when it comes to oil executives. David, how much change has this man experienced in the time that he's been at Exxon?
Enormous amounts of change, and really even over just the last 3 years, frankly. And so much of the time I spent with him a year and a half ago, 2 years, when we were doing our documentary, was really questioning the ambitions when it came to carbon capture. But I have to say, since then, they bought Denbury in the pipeline system. They've gotten the permits to a certain extent to store the carbon if they
yeah, is this thing really serious?
And they've signed deals, Jim. So, they've really done it to a certain extent. Obviously, so much more
Market's open. Come on.
This is incredible.
Give it to me. Give it to me. Yo. Yeah. Thinkorswim is definitely lagging.
What they're doing is saying, listen, we're putting the money right there. You want to make a decision about whether we're good actors or not, go ahead.
Buy limit at 910. Buy limit at 910 on NQ. Come on, baby. Hit me. Oh, you. Stop playing. Stop playing. Come on. Just a little more. Not giving it to me. Look at the Dow ripping. Okay. Let's try this. Come on, bruh. Adding market on on NQ. Come on. Bruh. Bruh. Mother sucker. Yo, Dow is ripping, y'all. Up 50, almost 50. Nope. What's that? Yep, up 50 points on the Dow. Taking partials.
Less suboptimal experience during COVID. David, I don't know the bloomers off the pet,
Bruh.
bros. I mean, Chewy, just their outlook so disappointing. This was the great way to be able to have your pet just serve the pet like it's a human. Now I feel like Chewy is just an also ran. They changed out their CFO.
NQ's gonna rip right through it. Don't play. Don't play. There you go. Let's go. TP on NQ hit. Let's freaking go. Come on, ES. Stop playing with me, baby. Let's go. Booking profits on NQ on the Forex side. Yo, ES, don't play with me, baby girl. Give it to me.
So, all right, they came in with lower numbers than was anticipated, but is there are we talking here about consumers trading down? Jim, give me a little more here.
She gon' go. She gon' go. He going. He said, baby. Oh, I just played. Damn, where did she pull back to? Watch. Right. Yeah, right to 907. Oof. Now, if the ES could just act right, you know what I'm saying? It's gonna be a bit of a chase.
Gemini. I've been playing with Gemini. You can do it on Twitter. Gemini is disrespected by the analysts who say it's just a party game. Google unveiled some things yesterday that I think are exactly how the consumer can use chat. And you know what they can do. You can plug in anything, and it helps you develop your thoughts. That's where I think consumers are going to use this. If you want to, let's say you want to do a business, start a business, but you don't know how to do a paper which explains it to all the venture capitalists, I would just give it to, I would give it to Gemini.
Come on.
That's why the stock is flying. And analysts are like, yeah, this is just nothing new. Are they crazy?
Yeah.
This thing's electric.
I would encourage people to Sundar
3 minute up, 300. Thank you.
A
Awesome.
6-minute demonstration of what it can do. We watched
Let them know where you get this at, bro. Where you get this at.
in some ways. I mean, I guess we know this, but watching it in real time in terms of what it can recognize, how it communicates, Jim. And I assume a lot of people who are buying the stock right now may have seen that same demonstration.
Oh, they have to. Look, we're past it. I mean, there was a time when you would just, do it like search. Give me the 3 best restaurants between 45th and 48th that serve Mexican food. That's over. I mean, this is like true concentrated.
Ooh, and you still going.
Obviously, I think in many ways, David, it's smarter than you are. We get that. But I would use it for
Oh Lord, oh Lord, oh Lord. Look at her go. Look at her fly.
Use it to summaries. Because I think the summary is going to be the most important thing. You get a 90-page document, you just go and say, Liam, could you tell me what's really important here? And you can speak very conversationally to Gemini, right? I mean, Gemini actually gets you.
Right. AMD also, Lisa Su, speaking, of course, of what is going to power all of these large language models. It's chips, almost all from NVIDIA in the data center. But AMD is trying to move, and they're talking about a market that's moving faster than anything, Lisa Su says, quote, we've seen before, and therefore we've accelerated our roadmap too. Thoughts about the news that we got from AMD in terms of what that means?
In August, Lisa Su was using a $200 billion figure over the next 4 years. She changed it to $400 billion. David, not many months since August. Now, the difference between NVIDIA and AMD is NVIDIA has a huge software component. AMD doesn't have that yet. The software is used for training. That's part of the main part of what you need if you're doing AI. So as much as I really applaud what Lisa Su showed yesterday, I think there's room for both, clearly, because there's just so much demand. But the software layer of NVIDIA still gives me the edge. Not the actual hardware. They seem almost even, but it's all built in when it comes to NVIDIA. You got to write stuff for AMD. But congratulations to Lisa Su for really expanding, because they need these chips. And everybody, all the customers are desperate, whether it be Meta, whether it be Microsoft, whether it be AWS.
Right, whether it be Amazon, which takes us back to your interview.
All right, ladies and gentlemen, that's what we got first thing in the morning. Nice, nice.
Let's take a listen to
Sure,
what he
no,
has to say. Let me get your analysis on the other side.
In my opinion, all the generative AI, especially because all those efforts are effectively starting now, are going to be in the cloud. There isn't going to be this 90% of generative AI spent on premises. And so I think that there's going to be a huge number of, every company is going to reinvent their core customer experiences.
Jim?
90% when he says on-prem, 90% is not in the cloud. It's like the old days with your PC and server. David, if you're doing that, if your company is still on-prem,
Ooh, whoa, the Dow with the reversal. Okay, we are gonna leave that alone.
Amazon Web Services, there will be no on-prem. It just doesn't work.
Well.
It's a selector.
Queen's like, drop, bitch, drop.
Not a word processor, but a big leap in terms of something you can talk to. No code. No code at all. And Gemini, as well as Amazon Web Services, will be really just the only way to go. And I think people are really not understanding how quickly this is happening.
Yeah. When you sign up for AWS, though, you're really kind of locked into Amazon in the same way that I guess when you sign up with Google, you're going to be locked in there with Microsoft, with Azure, and or all the software that comes along with it, right? It's not so easy to change, is it, Jim?
Give me a second, guys. I gotta hop on a call real quick.
If you're worried,
All right, ladies and gentlemen, I'm back. Come on. Let's see what we doing here. Can you hold this level? Y'all take any trades? Anybody? I know Queen caught that short.
Good Thursday morning. Welcome to another hour of Sport on the Street. I'm Sarah Eisen with David Faber. Live for you as always from Post 9 of the New York Stock Exchange. Carl's got the morning off. Take a look at stocks here early action. Little changed on the Dow. S&P is up 4/10, and tech is coming back today. It's up about 6/10. Shouldn't say coming back. Had a strong day yesterday as well. Part of the reason the Treasury rally continues, and it has been a powerful one. We're seeing the 10-year note yield 4.1%, firming up a little bit, but the theme has been lower yields and Treasuries higher prices, that is. The 2-year yield a little bit lower today, below that 4.6 level. 30 minutes here into the trading session. Here's some movers we're watching. AMD rallying after news that Meta, OpenAI, and Microsoft all plan to use the company's newest artificial intelligence chip.
Nice, nice. Looking for shorts? Aye, Queen, I see you.
NVIDIA's AI chips. The new chips slated to begin shipping next year. Rough morning for Ryan Cohen as shares of two of his companies sink post results. Both GameStop and online tech company Chewy reporting revenue short of estimates. Some ugly reaction, especially for Chewy. Watch Dollar General as well. Profit topping estimates there, though adjusted earnings did fall to 5-year lows, and same-store sales fell more than 1%, second straight decline, and the steepest drop in 2 years for that company.
We got wholesale trade data that was out just moments ago, and Rick Santelli has it for us. Rick.
Yes, David, our October final read on wholesale inventories. Now, this is October final, so that's the first month of the fourth quarter. Very important. Expected to remain down 0.2. And once again, a big revision. These mid-month reads have really had some big changes in a variety of releases, down 0.4%, double the expectation, and that is the weakest level since June. And we know that inventory's been on the weak side all year because September of this year is the only month above.
Today is Thursday, some water.
On sales, also a big miss. We're expecting a positive number to be around 1%. This is a final read. This is a new October read. Sales side down 1.3%. That is the weakest since March of this year, and it really does underscore the notion that inventories have been on the lean side. Sales had really picked up markedly outside of this. We all know third quarter was running a GDP over 5%. So these are important numbers to pay attention to for Q4, especially going into the holiday season. Sarah, back to you.
Yeah, we're tracking under 2% growth for Q4. Big difference from the third quarter. Thank you, Rick. Rick Santelli. Other big data point today that we're watching and that investors are watching, of course, is jobless claims. It's Thursday, and we've been scrutinizing all the jobs data a lot lately, kind of tomorrow's big jobs report. So what we got was claims edged up 1,000 last week to 220,000. It doesn't really set us off trend. It's not some alarmingly high number, and it kind of smooths over the average. Continuing claims is another one everyone was watching. This is people who are continuing to file for unemployment claims and be
Yo,
ordered.
yo, yo.
It dropped actually last week to 186 million. So kind of did a lot
What
of the
it
jump that the filings that we got
do?
the week before.
86,000.
On continuing claims, people that are on continuing claims. That's what the level.
What's that?
86,000.
1.86.
Yeah, what's up, bro?
1.86 minutes.
On
Right,
those
this
continuing claims.
Think he's
But the bottom
think he's
line
long
is
ES.
it
I
doesn't
think
point to any mass layoffs that make the
he's
crime
long
rate sort of
ES with no stop loss.
cooling a bit, but not seeing any type of labor market recession. I think the bias for tomorrow into the dollar
Me, I'm up on the day already.
number just because the treasury rally has
ES long, NQ
and yields
long.
have come down so much.
Oh, wow.
But I would say Chris Ruckey is an
Damn,
economist
bro.
that I follow. He
That was
works now at
solid.
Forward Bonds. He says, as far as the data is concerned on jobless claims, it's not stressful enough to cause the Fed to go from hiking to cutting in any kind of fast way. And that's not what the market is necessarily expecting, but it just does let the Fed be on hold with its higher restrictive rates, which is what we're expecting for the next meeting, and keep the market guessing about it.
What's the next? I mean, we get jobs obviously tomorrow. What's the next real? We're going to be in this holding pattern for a while.
It's going to be Johnson's
Okay, okay, ES, holla.
We did get a nice data point today. Manheim used cars continue to show that the vehicles continue to show decreasing value. We know goods prices have been deflating. It's really on the services, and we read into all these data points. I think the question for the market beyond just when the Fed cuts is how much further can this Treasury rally go? That's really been fuel for a lot of the equity rally. And so I was trying to go through some of the notes and the historical data on what usually happens between a Fed hike and a Fed cut. Bank of America had a very good note this morning about that, and they think that the Treasury rally can continue. They look at the last 5 cycles where the decline in 10-year rates between the last hike and the first cut between 72 basis points and 163 basis points of lower rates. So far, what have we got? About 90. 90 from 5 to 4. So they say it could go further. Also, they're measuring it from a different place. The last hike, the 10-year note yield was 3.87. That was in July. So they're saying if you measure it from there, because that was the last hike, you could go down into the 2 range on the 10-year yield. If you look at least the historical
Two
period.
range before we get a cut.
No. Well, yeah, between hike and cut, 225 to 315 when the Fed begins cutting. That if you follow historically the price action between those two events. Again, who knows if that'll happen? And also, I think it depends on the data whether it weakens further.
Does it depend at all on something we talked about for a few weeks and then have sort of not discussed, which is supply and how much of it is going to be out there?
Yeah, that's kind of gone on the back burner.
It has, hasn't it? Remember those days when we were focused on the maturity schedule, what the refinancing needs were going to be, what the number was?
Because we got that, we got a few months ago higher than expected issuance number, and we had a few options that were kind of iffy on the demand side. So we'll continue to watch that. No question about it, but so far they've been well absorbed.
Yes.
And there's been plenty of demand, and the Treasury, I think, has been paying attention when it comes to setting its issuance. But yeah, we have a debt problem, and that's not going away. It's getting worse.
We certainly do.
So that's
I have a feeling
part of
we
it.
will be talking about it in the future.
We will, and I think they'll be talking about it until the election.
That was at 8:30.
Let's also talk big tech because Microsoft is meeting with investors today. Tech's been struggling in December, but still remains the best performing sector of the year. Our next guest predicts an acceleration of spending around cloud and AI and believes the street significantly underestimates it. Joining us now is Dan Ives, Wedbush Securities Analyst. Bob Bassani also joins us to talk about the sort of discrepancy between tech and everybody else. But first, Dan, on Microsoft. How much of a bellwether is it?
Right now,
We
the
are.
trophy case for
We
AI
are.
is in Redmond. And I think if you look, Microsoft's really the torchbearer. They're leading the way on AI because of Copilot. And what we've talked on in this program is that for every $100 of cloud spend, we think there's an incremental 35 to 40 of AI spend. I think this is a golden age led by Microsoft. Now you're seeing Google and others start to get on the train. And in our opinion, it's the start of a new tech bull market, AI driving it.
Any news you expect from Investor Day today?
I think some sense in terms of maybe on the OpenAI, post-OpenAI soap opera, depending on the questions. Nadella really talking about the strategic footprint going into 2024. Look, this is it's a champagne quarter for Microsoft. It's really been a champagne year, but ultimately, if you go into 2024, it's just the beginning. I believe the first, second inning of where AI is going, and everyone trying to play catch up to Nadella and Redmond.
Well, meanwhile, the story today in the market is really Alphabet stock price. Interestingly, Gemini was introduced yesterday, relatively early in the trading day. What's going on here? Why is it getting that reception, and how significant a competitor will it be in terms of putting Alphabet back in the running, so to speak, for the lead position.
Yeah, we're bullish on Alpha. I mean, in our opinion.
You're bullish on everything, Dan. Come on.
But importantly, on a sum of the parts, I don't believe that this is a stock that reflects the AI success that they're going to have. If you look at GCP, you look at Google Cloud, and the opportunity of Gemini, I think investors, what's happened is almost a delayed reaction. I think it's been a moment of truth for Google, and they came and delivered. And I believe in terms of this $1 trillion market over the next decade, they are going to be a significant player. But I believe enterprise, that's the golden goose that they're going after. And I think you could start
They have something to lose on the consumer front
All
as they lose
right.
perhaps their position in search as by far the leader.
Yeah, I think right there, they're top of that mountain. I don't think that they're worried about Bing or anyone else from a search perspective. Use cases are exploding. That's what Google is going after. That's why this is, I think there's a moment we look back, a historical moment for Google.
I mean, that's part of the bull story of the market this year.
Yeah.
The year that AI started getting priced in to NVIDIA and Microsoft and driving the whole market. Do we get that next year, or is all the good news in there
Well,
already?
this is the critical point you just brought up. I think of August 1995, the Netscape IPO. That's what launched the internet craze. And is this the pivotal moment? Is 2023 the pivotal year that AI had that once-in-a-generation pivot like the internet was in 1995? And I think you're onto something. First of all, I think you should take a victory lap. You were right all this year. You've been relentless.
Why can't you believe the lungs are working?
For your relentless bullishness. But you've been directionally correct. You've been right on your calls and wrong on your clothing for years and years and years. But we love you
He's a
for that.
clothing influencer. He's a clothing influencer.
Absolutely.
I'm telling you, this man is making revenue from this.
Oh shit! Wow, I was on mute. I'm a burnout.
Getting them, just keep doing it. But when up in September, October, these stocks went down as well. So try to take the other side of your relentless bullishness.
I think Sarah and David, we've
Taking along on GBP USD.
if use cases,
Man, look at you. Nasdaq is about to.
believe they are, and just in the enterprise.
Correct. My second target on ES is approaching.
You're seeing growth. I think 8 to 10% of IT budgets are going to be AI in 2024. Less than 1% 2023. That's why you're seeing some MongoDB, Snowflake.
Okay.
You're seeing now some of the ripple effects of broader tech. So use cases expand.
Yeah, I'm seeing my second target is my third target for the day is 45.84, and we seem to be heading towards that.
More than 200% this year. What happens next year?
So I do not. Okay, there's a portion that's reflected, but I believe the street is significantly underestimating the monetization that could happen. You could ultimately look at numbers from Microsoft that essentially could be up 15-20% ahead of the street 2-3 years from now, and they continue.
That was kind of holding this 30-minute higher low off of EMA. We go to, it's the only one red on the day, so I think the Dow is gonna end up pushing to go positive as well. Possibly take out 36,200. So you know what I'm gonna do? Going long. Just went long the Dow. My first target is going to be the wick on this 15-minute time frame, which is 36,200. My second target will be 36,250. My stop loss is going to be 36,054.
Is that at risk here?
I think it's a much more disciplined what you're seeing from a VC, from private equity, even institutional. I think maybe some of the discipline
Yeah.
is how many sort of missed the ride going into this year. But I still think it's a get out the popcorn moment. This is not over. This is just starting what I view as the new tech bull
You know what the
market.
great story of 2024 is going to be is finally we're going to get true personal digital
Come
assistants. And when I look at ChatGPT and Bard and Gemini now, finally we're going to see a Bob 2.0.
Bro, look at this market go.
Actually being sort of part
Run,
of what you are
run,
and integrating itself into your
run,
entire
baby.
life. And I said 5 years ago, I think by 2025 or 26, 30%
It's about to get taken
population will need
out.
a personal digital assistant as their best friend. And that's what's going to happen. It's finally here. It literally here in front of us. You can see more. And as Jim said this morning, it's more than just get me a plane to Paris and find the cheapest route. It's integrating real human interactions that we're going to see them making our lives better and helping us out. That's what really excites me. It's going to be the year of the personal digital assistant.
And I think that's why Musk, Sue, Jensen, Cook, it's all focused right now on AI.
Here comes the takeout.
I do wonder if it expands into banks and railroads and other service industries that can start to use generative AI to become more productive. I talked about it with the Walmart CEO this week. I don't know if investors are valuing these companies with the productivity that they're about to have.
That's a big question.
I think you just nailed it. I think that's like to David's point. I think that's the rest of the market. A lot that's not reflected in a lot of these stocks and all these CEOs boardrooms. That's what they're focused on right now.
All right, very exciting stuff. Thank you.
Great, thank
Dan
you.
Ives,
Congrats
Bob
on the
Pilati,
Thank you.
fashion influencer. As we hit our
Let's
break, here's our
go.
roadmap for the rest of the hour. The White House taking new steps to combat high drug prices, but will it work? We'll discuss after the break.
Plus, we're going to get a fresh read on the consumer that ahead of another big jobs report tomorrow and a Fed decision next week. The CEO of Hilton will join us later this hour.
And JP Morgan's Jamie Dimon bashing Bitcoin. But it's not stopping the big rally in cryptos. We'll tell you the big winners.
Also, Elon Musk tweeting just moments ago. I flagged this because he's taking aim at Disney's Bob Iger. He needs to learn how to spell Mr. Iger's last name. Got a big show still ahead.
EP2 hit. Beautiful. All right, let's see how far are we gonna pull back. Good. Very good. I'm positive on GU longs as well. Just now looking for a decent area to relong in Q. But those longs are looking good. I think we're gonna end up breaking this morning's run up highs of 982 on NASDAQ. Mm-hmm. Yep. Mm-hmm. Mm-hmm. Yes. Yeah, hilarious.
from Elon Musk on the X platform. Of course, there it is. This goes back to last week where he called out advertisers in no uncertain terms who were boycotting X, in part because of some of Mr. Musk's tweets. He misspells Bob Iger's last name, but he's basically saying, hey, you're not going to advertise on X, but Facebook and
Wow,
Instagram
it's already
child
10:30.
abuse, yet you continue to advertise there. And to refresh, take a listen to what Musk had to say last week.
Stop. You go, don't advertise.
You don't want them to advertise?
No. What do you mean? If somebody's going to try to blackmail me with advertising, blackmail me with money, go yourself.
Alright, ladies and gentlemen,
Is that clear?
nice little bounce here on.
Well, let me ask you then.
That's how I feel. Don't advertise.
So there it is. But he continues, Sarah, to be focused on this.
It's a fair
And
point.
it is. There's a fair point there to be made, certainly. And obviously, it's also off of our story, by the way, on CNBC.com.
You know, and Elon gets a lot of headlines for whatever he says and does. But if you look at all of the social media platforms, you can see there are problems, whether it's the child issue, whether it's, rampant hate speech. I think Nikki Haley in the debate last night brought up TikTok and said we need to ban it. Because she cited this study that found that spending 30 minutes a day on TikTok was associated with a 17% increase in the likelihood that kids will hold anti-Semitic or anti-Israel views. So she was talking about it in that context, but I think there are questions for advertisers, and they don't get them as much on TikTok and on Instagram and Meta. They only get them on X, I think, because of Elon's larger-than-life kind of persona. So we should ask them.
You're right.
We should ask Mr. Iger, I-G-E-R.
Yes. There's no E in front of it, Elon. But
But
worth
the point-
noting,
the point was
it. And of course, this will continue to be an issue.
So big news from the White House this morning when it comes to combating high drug prices. Let's get to Bertha Coombs with those details.
Damn.
What's the strategy here, Bertha?
There goes
It's
NQ.
in a way an extension of the Inflation Reduction Act. The Biden administration is asserting its right to seize drug patents of certain high-priced drugs that were developed with government funding. Now, the 1980 Bayh-Dole Act let universities and small companies commercialize discoveries made with government funding, things like medical technology, drugs, and even Google and some quantum computing. But now the White House wants to use provision of that law to take on high drug prices. It comes 9 months after the National Institutes of Health denied a petition from cancer groups to use that margin provision on Xtandi, prostate cancer treatment that lists for more than $150,000.
We're looking good. We're looking good.
Bipartisan law does allow march-in when a patent is allowed to lay dormant. Breaking the patent on the basis of price has never been done. Senator Elizabeth Warren, though, applauded the effort to expand on the Inflation Reduction Act.
When there's no competition in a market, then that falls hard on people who need that drug. It also falls hard on taxpayers who end up paying for it through other government programs. And March-In has been in the law for a long time. It hasn't been picked up and used very aggressively yet.
Well, even if used selectively, march-in could potentially impact patents of small biotech firms that get a big hit, which is not, right now they're not subject to the Medicare price negotiation under the IRA. Pharma, the pharmaceutical industry group, says the march-in rule set back research by 40 years. Joe Allen, a former staffer for Senator Birch Bayh, told me that the march-in provision was meant to prevent federally funded patent holders from keeping inventions from the market, not going after prices. Back to you.
40 years. Did I hear you say that? 40 years?
Well, over 40 years, since 1980. And the idea of this was to help universities and get a lot of these patents that were laying dormant to get out there and develop these products. And in healthcare, we've seen tremendous strides. Now the question is, can you use it to spur competition on the basis of price? The administration thinks they can.
Yeah.
Let's see. Come on.
Thank you.
Looking for a nice little pullback. Might have missed the relong on NQ.
My interview with Exxon's chairman and CEO Darren Woods. That was a little They
And
also, of
she
course,
running.
introduced a significant growth
Come
plan
on, one more
yesterday.
time, one more
Talked a
time.
lot about that. We'll share some of that with you right now.
Come on. Nice, nice, nice. Okie doke, okie doke. Look at this. I'm taking partials on my GU long. Hey, y'all. Mm.
Rated PG. Let's take a look at shares of ExxonMobil up nicely this morning. CEO Darren Woods joined us last hour. We talked through, of course, the company's latest corporate outlook, which included a number of different important data points. We also talked about oil production and the future for its low carbon business. But we almost got a read on this dispute between Venezuela and oil-rich Guyana. Venezuela has a resolution basically that says, there's some disputed territory that we believe is ours. Guyana's only got 1 million people. So it has raised questions if, in fact, Venezuela were to get hostile, could the country defend itself? Guyana has a lot of oil. ExxonMobil is the key operator there, along with Hess, which is being sold to Chevron. And so I asked Mr. Woods if he's seeing any or fearing any impact from this potential hostility.
I'm not sure Guyana's standing on its own, to tell you the truth. I think, there are a lot of, we've all seen what happens when nation sovereignties are challenged and unilateral actions taken. I think the world and outside community have grown pretty sensitive to that. So my expectation is there's more support, more broad support in the international community to make sure that the right process are followed to resolve.
New highs coming, new highs coming.
We know what we need to do in the country, develop those resources economically, responsibly, and do what we've been contracted to do. That's what our organization's focused on.
We'll be talking eventually, sir, as much as 1 million barrels a day out of Guyana. It's very important. So there is focus on this. And by the way, for Chevron, because Hess is the second partner there, Exxon operates, but Hess owned a lot of the acreage as well. There's some worries. What does that mean for the value of Hess if this thing really were to escalate, so to speak.
If Venezuela somehow were invaded and took over.
Correct, exactly. Because of course we know what they did with their oil; they nationalized it.
And they never meet their own fuel production
No,
needs,
no,
I think.
they haven't. And then we spent a lot of time, as you might expect, as we have now for a couple of years, talking about low carbon solutions, their efforts on lowering overall emissions, increasing spend on that, by the way, from 17 billion to 20 billion through 2027. And I did ask, Mr. Woods, what else needs to happen here to sort of get you to spend even more and get the kind of return that your shareholders might want that would be
NQ looking like we might head back to 16034.
Carbon capture and storage is going to have to go higher with time. We view this right now as an opportunity to get started, get the technology in place, start building these things, generate some efficiencies, and see if we can find ways to lower the cost, both from a construction standpoint, but from technology evolution and scale standpoint. But David, I got to be clear, for this to be successful with time, you got to move from government subsidies to a market force. And we see this as being a temporary catalyst to get started.
Right now, it's just $85 a ton in terms of carbon, what the tax credit is, so to speak, Sarah. They'd love it to be more, but they'd also like the market to actually really form in a significant way around them. They are making real efforts. It was a key question of our documentary some time back, but since then they have. I mean, they've got a number of contracts to sequester carbon for certain companies. They bought Denbury, which has the largest pipeline to transport carbon as well. They've got the permits to potentially store it underground in the Gulf of Mexico, or at least pursuing them.
So they're walking the walk.
They seem to be, but of course, many would like them to spend a great deal more and for it to become a very significant part of their overall business. That, as he indicated, is still
that helps, right?
It helps, and as Woods made clear, though, there's a lot of the rules that haven't been written yet, and will take place over the next, let's call it, year. And that will be very important for them.
Right,
We might get a little pullback for the London close and then continuation.
They've been buoyed by oil prices, which have been weak lately, right? I mean,
they've been. He just talked about basically the supply-demand picture being imbalanced towards less supply over time.
Yeah.
He doesn't ever focus on the short-term moves.
Yeah. He'd get a big headline if he did.
Yes, he would.
$69 a barrel for WTI, up a little bit today, but still down about 8% over the last 1 week. Still ahead, JP Morgan's Jamie Dimon sounding off on crypto again. He took it up a notch this time. That's it. Bitcoin's up more than 20% in a month. We'll bring you the headlines. Plus, don't miss a fresh check on the consumer. We're going to talk to the CEO of Hilton as that company celebrates 10 years since going public right here on the New York Stock Exchange. He's going to join us next. Don't go anywhere.
What a morning. What a morning. I'm still waiting for a possible entry on NQ. ES upside target smashed 45.84. If we pull back and let's say we hold above 45.80, I might be inclined to take a long. But do also remember that tomorrow is NFP. Is it? No. Jeez, I don't even know the days. Jesus, this is horrible. Let me see. No. The first Friday was last week. Let me just make sure. If that's the case, yeah, we're good. No major. Tomorrow. Unemployment. No, so we do have non-farm payroll tomorrow. So, all right, so tomorrow's non-farm payroll. That's interesting.
freelancer.
Welcome back. I'm Silvana Henao with your CNBC News Update. The man who killed 3 people in a University of Nevada, Las Vegas building Wednesday was a former professor who had been turned down for a job at the school. Sources have confirmed to NBC News. Authorities say they killed the 67-year-old man during a shootout.
Yep.
They have not officially determined his motive. Donald Trump is attending his $250 million civil fraud trial.
Yeah, we're gonna see a little retracement for the London close. After that, let's see what she gives.
Expected to testify once again on Monday as the defense's last witness. And the blockbuster Oppenheimer is finally getting a release date in Japan, where it faced fierce backlash. The film tells a story about U.S. efforts to develop the world's first nuclear weapons. Critics called it insensitive toward the only country to have suffered atomic bombings. The film's Japanese distributor said it will hit theaters there sometime in 2024, David.
Savannah, thank you. The price of Bitcoin has soared more than 150% this year, and more recently topped 44,000. This on hopes of a futures ETF. But that said, JP Morgan Chairman and CEO Jamie Dimon, well, suffice to say he is still bearish, telling the Senate Banking Committee that cryptocurrency should be banned. Take a listen.
I've always been deeply opposed to
There
crypto,
goes
Bitcoin,
NQ. Damn, you
We did
just
that
don't want to
when
let me in, bruv.
drug traffickers, anti-money laundering, tax avoidance. If I was the government, I'd close it down.
Kate Rooney, I'm curious. You know, it's not like he hasn't said this before, although those were rather stronger words, perhaps, than we've heard from him.
Yeah, he did seem to ratchet up the criticism, and he's standing in front of Congress, which I think gives it a little bit more weight. But despite Jamie Dimon's warning there, the sector is doing pretty well lately. Stocks tied to crypto, namely Coinbase and MicroStrategy, are some of the best performing tech stocks this year. They're up roughly 300%, and it's been a tough time to bet against those crypto proxies. Data from S3 Partners shows short sellers have lost more than $6
Just
billion
watching and
this year on those
waiting,
crypto-related
watching
bets.
and
More than half of
waiting.
those losses came from Coinbase shorts. Became a pretty popular trade this fall. Short sellers increased exposure in September. What they thought was an overbought sector, according to S3, short sellers are down $2.7 billion in the past few months. In percentage terms, that's about 148%. In terms of losses, retail traders have also started chasing that momentum. According to Vandetrack, individual traders started rotating out of some of the big tech names into crypto and those crypto proxies, as well as small caps. Bitcoin mining names, Coinbase, MicroStrategy that I mentioned, have all benefited from some of those retail inflows in the past week, as well as some of the less popular crypto proxies like CleanSpark, some of them mining names. Vanda points to an upcoming January 10th deadline for the SEC's potential approval of a Bitcoin ETF, causing a lot of this excitement, they say, being a very momentum-driven asset class with a clear catalyst on the horizon. We wouldn't be surprised, as they put it, to see retail traders continue to pump flows into the space over the coming weeks. Guys, back to you.
Thank you very much, Kate Rooney. Hilton celebrating 10 years since going public on the New York Stock Exchange, doubling its brand portfolio, growing its property footprint by over 80% in that time, and seeing the stock rocket 260% at a time where the S&P 500 is up about 150%. Joining us now to discuss what's next, Hilton Worldwide CEO Chris Nassetta. Thank you for joining us here on this big anniversary.
Sarah, thanks for having me. David, great to be here with you. You gave some of the great stats. We've had a really remarkable 10 years since going public again. We've been a public company for many more years before that, but we've nearly, as you pointed out, doubled the size of the company. We have the biggest pipeline for future growth in our history. We're opening now almost a hotel a day. Our loyalty program has quadrupled over the last 10 years. We've, I think, led the industry in innovation from a technology and customer point of view. And very importantly, because we're in the business of people serving people, we were just named the #1 great place to work in the world. So we're very proud of the culture we built. As you pointed out, my numbers say we're up 330% since the IPO, so we'll have to have somebody fact check.
You're outperforming the market.
We're outperforming Dow Jones, S&P, and our competition.
Well, congrats on the milestones, Chris. And it has been during some interesting cycles for the hotel industry.
For sure.
Tumultuous ones, including COVID and then post-COVID. And it brings me to the question that everyone's wondering now is have we seen the bulk of the travel recovery?
at this point?
We haven't really. I mean, we still see a lot of strength in all our big segments. I mean, you're certainly seeing a normalization, as you would expect in leisure business, when people didn't go to work, kids weren't in school. You saw sort of an abnormally large increase in leisure business, and that is still very strong relative to pre-COVID, but it is normalized. But what's more than making up for that is business travel. Everybody wanted to say, I think it was on CNBC.
Yeah, it was never coming back.
It was never coming back. Nobody's ever going to go on a business trip. Well, guess what? They are. And
Here comes
this
the
thing called
pullback for the
incremental,
London
flexibility
session.
in work schedules, more mobility. That's all really good for our business.
Are we back to 2019 levels on business?
Well, different segments. The bulk of 85% of our business is small and medium-sized businesses, and that's over 19. Big corporates are still a bit under, but even in this environment, which is obviously slowing, they're growing. And the other segment, it's only about 20% of the business, but important, particularly in the big cities, is meetings and events. Meetings and events demand is off the hook because people didn't have meetings and events they needed to have for basically 3 years. And so there's a huge amount of pent-up demand. So as we go
For next year too?
For next year, we have booked in the last 2 quarters for all future periods more groups than we've ever booked in the history of the company. So we are way over any historical high water marks in terms of meetings and events.
What is
for
with
the
this
finish of
little
this year and
pull?
importantly into next year. So as we think about
Let's see what it does
next year,
around
reality is the slowing of the
15,980.
economy, you guys pointed out, I watch you all the time, is slowing. And we expect that we can't ultimately, operate outside the economy, but we have some reasonably unique things in the sense of more business demand and particularly meetings and events, international inbound business that we think are going to be quite good as we go into next year. So I feel really good about the setup from a demand point of view for us next year. And we're growing like crazy.
I mean, but what's normal, I guess?
Got about a little over 15 minutes left, so if you guys have any questions, feel free to ask.
What's normal?
Yeah. I mean, in the sense of, to the extent that, for example, events you just said, people want to get back, they want to do it, but I don't know what the normal pattern looks like, and/or this revenge travel period that people say that we're through.
Leisure is in the process of normalizing, and I think next year will be normal. We saw it in the fall. The normal fall in our industry for the last 100 years is when kids go back to school and people, go back to work, they do less leisure travel, and that's what we've seen this fall. So it's a normalization. And so I think we're going to continue next year. We're going to see normalized leisure travel. I do believe and feel strongly that we will see business travel continue to pick up. All of our customers, big and small, are telling us they're going to travel more for business next year. And I already told you, I think our group position for meetings and events next year is 20% above prior, pre-COVID levels. So that's that's the biggest piece of the business where we have visibility.
What's going on with hiring, Chris? Because for a lot of the post-COVID period, you guys have been the biggest source of job growth in this country. You were also the biggest source of job loss during COVID. Are we done with that process? Because I saw an ADP yesterday. It was a net job loser for the first time in a while.
Yeah, it's not. We're not done, but we're slowing down. I mean, the reality is we lost a lot of our teams because we went to basically zero or very low revenues. That had a lot of impact, not just on us, but across the industry. Over the last 3 years, we've been building that back. We're now bigger in terms of number of people than we were pre-COVID, but we're a lot bigger company because every year we're growing, 5 to 5, 6, 7%. And so reality is, while it's gotten easier to get the people we need in jobs, it's still not easy. And so I would say we're not back to fully what we need staffing-wise. So I expect through the combination of growing again next year, 5.5 or 6%, and sort of right-sizing incremental staffing to make sure we can deliver service, we're still going to be hiring people into next year. I mean, it's hard.
None of this sounds recessionary.
No, none of this.
Quite the opposite.
Yeah.
You don't think there's a recession coming? It certainly doesn't sound like you expect
I
one.
do think there is a slowdown coming, and I would not at all be surprised if we have a modest recession. You guys talk to a lot smarter people on the economy than me. The reality is soft landing is sort of the consensus view right now. I sort of buy that. as I said, I know it's like we're different than everybody, but we are a little bit different in the sense, the following sense. A lot of industries have fully recovered beyond, and we have, from a demand point of view, we still have a bunch of segments that are still in recovery that I think sort of help us get through a slower time. But I think it's crazy. The Fed will do its work. The Fed is going to do what they need to do to tame inflation, which by definition means we are going to have a slowdown. Is it technically going to be a recession? I don't know. We're definitely going to slow down into next year, and my job is to, fight against that by taking advantage of the business that's out there that's still recovering, and for us to gain market share, do better, do better than everybody else so that more people stay with us than the competition, and as a result of those things, perform well. And I'm feeling pretty good about what the setup is for next year.
Well, thank you for coming here.
Always
Post
great.
9 to celebrate the 10 years since IPO.
Great.
Talk us through it.
I'd like to see all the Hilton signs.
A lot of Hilton signs. Chris Nassetta, thank you very much, CEO of Hilton. Still ahead, a look at one country benefiting from a nearshoring boom. This Walk on the Street is live from Mexico next. Stay with us.
How low do you want to go? Short and Q, still pretty strong, so I would be cautious on that. But again, where am I getting all of this from? Yo, I'm getting like these marks on my hands. Give me a second. The fuck? Like, I don't know why I'm touching that. Got my hands all jacked up. It's not my mouse.
From Tesla to AT&T are investing billions in new manufacturing capacity, and not in China. With more direct investment in Mexico,
This is where.
on pace to reach $30 billion this year. Our Frank Holland is live from Monterey with more on what some are calling, Frank, a nearshoring boom there.
Yeah, good morning from Mexico, Sarah. As you mentioned, Mexico is estimated to have $30 billion in greenfield foreign direct investment this year as part of this nearshoring boom. That's money from outside the country to build new manufacturing, distribution, and storage facility. Take a look behind me right now. This DHL logistics complex, where tech, consumer, and industrial goods are heading directly to the U.S. market, is just one of many examples here in the Monterey area. Tesla, Mondelez, Hewlett
Whoa.
Packard, a number of other companies, Unilever, Honeywell, Mattel, list goes on and on of companies that are moving production
All
from
right,
Spain to
10 minutes to go.
this year. So according to founder of Zipbox, that's a sourcing platform designed to give U.S. companies access to the Mexican suppliers. Tariffs and supply chain reliability are both key factors.
That is one of the big drivers. People haven't forgotten about the trade war, the port congestion, and they think about Taiwan and they see these headlines. They understand that our future with China isn't stable. Even though Xi just came to San Francisco, that didn't really do much. People understand that it's shaky ground. And when you have all your eggs in that basket, it's scary to think that you're very vulnerable if anything changes. And if you remember, if you were importing from China when the trade war first happened, you don't get a warning. You get a headline and that's it.
Less expensive labor is also making nearshoring attractive. Estimates vary, but according to new data from Alex Partners, workers on average make $6.50 an hour in China compared to $44.82 an hour here in Mexico. However, we spoke with several manufacturers here in the Monterrey area. They say that advantage is being lessened somewhat by the Mexican government announcing a 20% increase to minimum wage for 2024. Sarah, back over to you.
All right, Frank, thank you very much. A story we're going to continue to be all over. Up next, we're going to unveil
The
the
issue
number
seemed
one
to have been
whiskey
my.
of 2023, discuss the crucial deadline that will have major impact on that industry. Don't go anywhere.
Okay, we should be good now. 9 minutes till London close. So I hope you guys that are green on the day, stay green. Don't overtrade, all right? And definitely, I would say check back later in the afternoon. See if we get another opportunity. It's marvelous. Do 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 do. There we go. But you won't. So I'll keep watching to see if we get a full retest of 982, 980 area. I may have missed it slightly. What up? What up? Might be you're super late, bro. Got like literally 7 minutes left. Yeah, took a long this morning on ES. Also took a long on NAS, took profits, and then it flipped back under. I hesitated on relonging. Even now, I'm looking for a possible relong, but I just want like a little deeper pullback. And I think we'll get that after the London close. So we'll see. But yeah, overall, like I just been saying, it was dip buys today. Everything was looking pretty good. Tesla was looking good for a longs. Nvidia looked really good as well. Nvidia may possibly come and retest this level as well. So yeah, so nice day. Nice run up. No crazy back and forth and manipulation like we normally get.
Facing some headwinds heading into 2024. It's whiskey that's causing the headache for a change. Sales of the once popular spirit are slipping. Last year, for instance, tequila and mezcal actually overtook American whiskey to become the second fastest growing spirits category by revenue and volume in the U.S. That's according to the U.S. Distilled Spirits Council. Brown-Forman, latest example, seeing a 2% dip in whiskey sales year over year for its first half of the fiscal year. Not in my house. I'm a big whiskey drinker.
You are?
I am.
I thought I knew everything about you.
I thought you knew that
And I
about me.
learned this. Maybe I forgot. That happens a lot lately. All right, all of this is happening as the whiskey industry is facing a potential
Here we
50%
go.
tariff on exports to the EU. That would begin on January 1st. Former whiskey advocate, executive editor, senior tasting panelist Jeffrey Lindemuth joins us now to discuss and to reveal the number one whiskey of 2023. First, Jeffrey, let's just start with the potential tariff, or actually the tariff that will take effect really only a few weeks from now. What kind of an impact will that have on the U.S. whiskey industry?
Well, yeah, we've seen the impact before because we're on sort of a 2-year hiatus from this tariff, and that deal comes to an end on January 1st, at which time it will jump from 25% to 50%. And
Oof.
we've been there before, and it severely impacted a $2 billion export industry.
How much were what were the declines?
I don't know the exact number of the declines, but we were on a steady path upward, and that was the first reversal that we saw.
Is there any hope that this is going to change in the next few weeks and the tariff will not be increased?
Well, a lot of people are lobbying for it. Mitch McConnell, Rand Paul, who have a big stake in this, with Kentucky producing 90% of America's bourbon, have been writing to the Biden administration, writing to the ambassadors in the EU, and pleading for a deal of some kind.
How is American whiskey doing relative to what's produced in Europe or Japan or other countries?
American whiskey's been having a great run, especially in the U.S. When I started in the industry more than 20 years ago,
4 minutes to go.
Scotch, and that was considered the greatest in the world. But American whiskey has been on a great run. There's a lot of excitement, especially among millennials and Gen Z, about bourbon.
Bourbon, yeah. I like Scotch. I like the smoky stuff, the peaty stuff.
Oh, yeah.
All right, we got to get to the whiskey, I'm told, because we're already running out of time.
Okay.
So let's get to what is, of course, the number one whiskey of the year. We can do a drum roll if we have one.
Well, if I can give you some real quick context, we have our top 20 of the year, which we're revealing this week on whiskeyadvocate.com. And the way we arrive at that is looking at 500 whiskeys we've tasted. We consider the quality. They've all rated 90 points or higher. We also consider the price, the availability, and something called X Factor, which is the exciting story behind the whiskey.
Okay.
So this is our number one.
Let's do it.
Oh, wow. An Oscar.
Wow. I don't even want to venture and guess at the name to pronounce it properly.
It is Glenglassaugh Sandend, and it is a single malt Scotch. We
Mm-hmm.
rated it 95 points, and it cost about $70. This is owned by Brown Forman, who makes another little whiskey that you may have heard of called Jack Daniels.
What distinguished this in 10 seconds or less in terms of your panelists and why they liked it so much?
Well, it's not only a delicious tasting whiskey, but it's a real great comeback story. The distillery was founded in 1875. It only reopened in 2008. So it's kind of new on the scene, and these are their first releases from the new stocks.
Awesome. Jeffrey, thank you. Thank you for the reveal. Sarah's going to take that bottle, probably take a few glasses for the next hour of Squawk on the Street. So it promises to be a really good one.
Evening time
you do?
for my whiskey.
Well, stay with us. We've got a lot more Squawk on the Street for you straight ahead.
Thank you.
All right, folks, that's going to be it for me. Thank you so much for joining today. See you guys tomorrow. Later. Oh, what's up? What's up? We got Mr. Deck gracing us. Took a short on the sim because I don't want to touch. Yeah, definitely. So definitely how you want to do it. Once you've made some profits, man, it's just literally you don't want to give that back. So if you feel that you still need to trade, do demo. Come in 1-2 trades, you're up on the day, keep that. Or have other accounts that you can trade, just to test things out. But overall, just stick to here we go. Very nice. Yeah, just overall stick to keeping your profits, all right? Stick and move. Now you're welcome. Be on the lookout. We might continue up ES may come and possibly retest 45.90. I mean, it's only up 30 points on a day, so this thing could really push a bit more. So be on the lookout for that. But outside of that, thank you guys again for joining. I'll see you guys tomorrow, bright and early. And stay green on the day. Do not overtrade, all right? Peace.